All right. Thank you once again, Igor. It's a busy NY session here, and welcome everyone. Good morning, and let's get started straight away with the hourly chart on the euro. We've got things to do. We got another entry triggered. But before that, for those who are just joining in or tuning in, we uh, we would like to confirm once again that Euro USD is well on its path towards 1.0750, and the stop loss can be moved, but we are not moving it right now. It is suggested humbly to keep the stop loss at 1.02 uh, double zero. As far as the wave counts are concerned, we've got series of ones and twos here. So you can see as I've labeled here for the ease of understanding and also posted in the portal, we've got a minute wave degree, minute wave 1, which is subdivided into minute 5 waves. Again, minute wave 2 is subdivided into minute ABC. I'm not plotting minute degree just to avoid confusion. So it has 5 waves up followed by 3 waves down. Yet again it has got 5 waves up followed by 3 wave decline with another wave 1 and 2. If we go one step further, it is actually got wave 1 and 2 of one lower degree as well. Alright. So it could be the third of third wave, wave wave 1, wave 2, again wave 1, wave 2, and again wave 1, wave 2. So it's kind of third of third wave. If we are done correctly this thing, then the next leg should be towards the 750 1.0750 mark, and I mean it could just be in a flash. It could come up in a flash, like say one trading week or so. All right, so we're still in a good position to enter alongside. I think in the last session we were discussing about a potential decline, and if it does so, it's going to provide yet another opportunity for us. All right, and that's what we are. We've just gotten on the long side again at 30. Now we are trading at 52. So things are moving quite swiftly, and it should be getting on the long side. I think I've already flashed the targets on 4-hour chart here. Yes, they are 750 and okay, 1.11. That would take time, but 750 should not take much time at all. All right, so that is the Euro USD setup. We go back to the dollar index now. I don't know if it's on exactly to the script. Last session where we were discussing a potential. If you, that's why we keep saying partial profits booked. It's a good practice because it's always going to give us a chance, just in case if it corrects or rallies to another resistance, and that's what exactly the dollar index has done. All right. So trading. Oh, okay. First of all, the waves. So Euro USD and the dollar index are absolutely mirror image, but on the opposite side. Here it's got wave 1, 2, 3, 4, 5 on the downside. So that's minute wave 1, and at ABC it's minute wave 2. Once again, okay, I just got labeling here. I can do that right now. We've got wave 1 and wave 2 possibly, and we are now going to go towards 3, 4, and 5 lower. All right. So what do we have here? We have wave 1 and 2. Again, we've got wave 1 and possible wave 2. So if this is done correctly, then the third of third wave, so we've got one lesser degree here. In Euro, we've got 3 degrees of wave 3. Here we've got 2 degrees of wave 3. But nonetheless, it is the third of third wave, which should be quite powerful and one of the most powerful, won't take much time, or should not take much time. The targets are flashing up on your 4 hour chart. It is 10560, 10485, and 102, and even lower. All right, so it's kind of a busy action day right now, as we just entered the New York Open. So here are the two trades and quite a bit high potential trade setups, I would say. Euro on the long side and the dollar index on the short side. The stop loss in the euro, again I will repeat humbly, it is 1.0200, and in the dollar index it is at least 109.85. I would recommend place around 110.30. Once again, the dollar index spot prices is very with wider. Chart is like it's from 8 cap. If you open a chart from capital.com, the high will be different. Right? So the stop loss will be adjusted or should be adjusted accordingly. Alright, so there we go. Two high potential trades that I've discussed. Let's pick up the third one now. It's quickly moving, so I would like to touch base with that first. Okay, I've done the labeling here. So it would be nice to do the labeling. I just thought it would be nice to do the labeling just to save a bit of time, and also when it is critically moving and the price action is critically moving, it would help us to get into the trade, or help everyone who is watching this get into the trade just in time. So what we have here is a neat little impulse 1, 2, 3, 4, and 5, and a corrective decline A, B, and C. So we've got minute wave 1, minute wave 2. Again, we've got wave 1 and wave 2. Yet again, we've got a lower degree wave 1 and wave 2. So GBP USD and the Euro USD are probably unfolding the third wave. That's a high probable setup. Or both Euro and Pound are unfolding an expanded triangle. You see, this could also be an expanded triangle. That is wave A, wave B, C, D, and E. That's an alternate count though. It's not a preferred one. But if it is an expanded triangle, no worries, nothing changes except for the fact that instead of A, B, C, it is going to be A, B, C, D, E, and the minute degree wave 2 would be terminating here. The direction of trade does not change at all right? So once again, after hitting a circuit of 1.40 2460, that is what we had discussed in the London session, I suppose. It is now neatly carving a three-wave corrective decline in the form of a lower degree wave to pound, and I think we should respect that. And it's possibly another time to go on the long side, right around the 1.2400 zone. Stop loss. Now this is where I would personally like to stay below all the noise. So that is 1.2, 1.21. All right. Uh, but if that risk management is not, if you're not able to take that kind of risk, then at least it should go below 1.2250. All right. Maybe in the 1.2240 or 30 to just keep yourselves away from the noise. It's just for this particular wave, the moment we see a break above that 25-45 zone, the stop loss is going to be revised, and we should be good to start locking in profits. All right. So these are the three high probable, high potential trade setups. And number four is also now, you can put that into a high potential trade setup category. and it is none other than gold. All right, so gold, the story in gold goes as follows. And just take 2 more minutes before we begin, before we come down to a conclusion of trade setup. Just 2 more minutes. Gold is okay. I'm going to plot wave 3 here of a minor degree, and I'm going to plot wave 4 here of a minor degree just to save a bit of time. And now I'm going to pick up an ABC. And let's change the degree to a minute. All right. So we've got wave 3 minor complete, and then we've got wave A, wave B, and wave C. Now, ideally, wave, if it's an expanded flat, that's what we are proposing. Ideally, the expanded flat would go and terminate around the 38.2% extension of the wave A. In this case, it has gone a bit higher, around 50 points or 60 points, and it tested the 61.8%. Now, theoretically, if it is possible or not is a question, but I think it would technically be possible in case of such noise which occurs normally in gold. So it could be an exceptional case, and we take this as a valid one as well. All right, so that's the reason why we are plotting B over here and not the production of wave 5 minor higher. Now let's get down to the business of trading. We waited and waited and waited for at least a couple of days, actually, or at least 4 trading sessions, isn't it? We now finally have something to confirm and cheer about proposing a potential trade. I think partially aggressive shots were already being taken, but now we've got a good confirmation. I'm switching into the 15 minutes time frame for a better view of the wave house. So we've got minute waves, one, two, three. Did we do a triangle last session? Yes, we did, right? If you remember. And we are also talking about the triangle, the triangle. Let me do the triangle first. We were also talking about the possibility of a triangle breakdown lower in the New York session, correct? And that is what we exactly had. Uh-oh. So that was a neat little ABCDE triangle. And what we see on the right hand side now is an excellent case of how a breakout would look. What is a test? You see that line being broken? It is so sensitive. I keep on saying the trend lines are so sensitive. So you see that line being taken out, and now you also see the test. It's being tested at the back. So it took a test, all right? Being so busy, it still took a test of the trend line, and that's what the trend lines are all about. It's really worth watching it over and over and over again, and then a drop towards the Fibonacci, not exactly the 61.8% or 0.618, but that's okay. I mean, you cannot expect everything to go point by point. I mean, it's not like we say that life is not a straight line. We also keep saying that technical analysis is is not always by rules of the book. Most of the time it is, but sometimes you got to understand and you got to be flexible. Now, if you keep sitting for 2658, then you would have missed the bus, all right? So we quickly book profits on our portal, flip the trades, and we are again short. So now, for those who are watching this, how to place our trades, or how to place your trades. Here's the Fibonacci 61 for Fibonacci retracements. Now it's a 38.2% touch, correct? So what we are now telling us it's expected is an ABC corrective wave higher. I've got to change the degree here. Just a moment. It should be good. That's a minute. All right. So first of all, partial shorts can be initiated right away. 28.95, 94.95. That is just a partial shorts. Okay, we are not recommending complete shorts. Keep some position for a rally towards 291015 kind of a zone. All right, and then enter remaining over there. The stop loss ideally would go above 2955 and the targets. So enter partial entry 2895, remaining 291012, potential stop loss or potential entry here, stop 2955, and Fibonacci extensions are now flashing up on your screens here. Oh, there are too many. I've got to get rid of them. All right, I think you've done the right one. Yes, sir. So now the first target is around 2800. So please revise your targets for gold 2800 and 2730. And once it breaks 2730, that would be a very good confirmation of a five-wave decline of one larger degree, and that's a minor wave. When you see 2730, that would be wave one on the daily chart. And we'll take it step by step. We'll take it wave after wave. Right now, it looks extremely potential to sell on rallies with a stop around 29.55. Those are the two marks, 28.95 partial as a potential trade, a slight corrective decline, and a rally towards 29.10 somewhere. So this is what is giving us the confidence now. Wave 1, 2, 3, triangle, wave 4, and possibly wave 5. So if that is correctly being done and identified, after the three-wave corrective rally, we should be having at least one more five-wave drop, which would take prices towards 28. I think it is 28.30, correct? Yes, 28.30 and 28.16. So as we speak, it's already 4 points down. So if you're a busy trader, I mean, you would have made around 400 points, 400 pips, right in gold. All right, so that is the story in gold. I think I'd pick up BTC USD once again. We are still not recommending any trade here. The only thing we are recommending is be watchful. Did you see where we were yesterday and where we are now? It is it is kind of facing decreasing resistances of that resistance and lower resistance and lower and lower. So it's a decreasing resistance. I'm not saying that it's continuously going to do that. But prices are almost 94 now, which is around 17% retracement of the recent swing high, recent upswing. So there are good amount of chances for prices to break below 91. By any chance, if you're holding longs, with all humility, I would suggest please keep your trades with a tight stop around 91 if you're on the long side. If you're on the sidelines, be watchful. We are just waiting for a price action break below 91, ideally below 87. Once that is happening, once that is true, we would start preparing for a sell on a rallies case. All right. And the indices, okay, let's have a quick view on the indices there. I was seeing that it's dropping, but we need to see further price action. Okay, we've got one, two, three, four, and possible five. But that could be the lower degree impulse which we were looking for. And another rally, I think by the time we meet next session, Tokyo Sydney overlap, I think we should be ready with the potential trade setup. Either it's a triangle forming or it's preparing for a great steep fall. In any case, we are holding shorts. Our shorts are active in Dow Jones with a stop around 45,500, but we've not yet activated them on SPX 500. So I think we should be getting there either this week or early next week for a high probable trade setup as we discussed in the euro and others. All right, so let's bring this current session to a pause now. And once again, thank you for your time. Thank you for tuning in. And I would be handing over to Ego. Back to you, Ego. Thank you so much.
Thank you, SPDas. Always a pleasure.
Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens gives you the edge. Forex Lens